Good morning, everybody. You're now watching Financial Freedom Minutes with Ming. Today, I want to share with you how do we set a budget for the year 2011. Okay, there is a saying that as soon as people make enough money to live comfortably, they want to live extravagantly. So that's why we need to have a budget. So what is a budget? Some people say budget is a way of worrying before you spend your money rather than worrying after you spend your money. Okay? So, but seriously, budget is a document that we actually use to guide your money spending. So why is it important for us to actually have a budget in the first place? Because what we want to do is that we want to be able to live within our means, we live within our income, so that at the end of the day, we can create some saving for us to invest for financial freedom. Okay, so today I got 3 simple steps to share with you as to how to actually set an effective budget for the year 2011. Now, first step to set a budget is to estimate your income on a month-to-month basis for the next 12 months. So when I say month-to-month basis, which means to say it's going to be January, February, up to December. Why is it that important for us to do on a month-to-month basis? Because we want to make sure that when we set the budget, there are certain income that we may be receiving in January that we will not be receiving maybe in February or June or other months. Okay, there could be also, that's why we need to do on a month-to-month basis to actually track the income. So under tracking the income, we need to look at 2 basics of income. Number 1 is active income. So what is active income? Active income basically is the income that you can generate by working, spending your time, spending your effort to generate those income. So the example of the active income are like your salary, director fees, commissions, part-time jobs, bonuses, and etc. Next is for you to identify your passive income. Passive income, as the name indicates, is actually the income that you actually can generate without spending too much time, without spending too much effort. So it's like those income that you can generate from investment. So what are examples of this income? Those income are like bank interest, stock dividends, business dividend, rental income, and etc. So step 2, when it comes to actually setting the budget, is to do estimate as to your expenses. So I will suggest also for you to develop your actually estimate for your expenses on the month-to-month basis for the whole year. So which means to say you have an estimate of expenses for January, February, up to December. Why is it important for us to do a month-to-month basis? Because you may have certain expenses, for example, in January, like children going to school, and for example, festival seasons, that you may spend more expenses in January, that those expenses you may not actually spend on March or actually in December or other months. Okay? Now, under actually estimation of the actually expenses, there are 2 basic items you need to look at, which is to identify needs expenses. Need expenses are those expenses that we need to incur, we need to spend in order to make sure that we can support our livelihood, support the livelihood of our families. So what are those expenses? Those expenses are like rental income, rental expenses, mortgage payment, loan repayment, food, household expenses, transportation, and etc. Next, we got want expenses. Want expenses are those expenses that will actually increase our quality of life. Okay, it would be an example like, for example, entertainment. Whether you go to the movie, whether you go to concerts, whether you buy DVD, you buy CDs, vacations, books, eating out, gym, okay, and etc. The third step, okay, before I actually come to the third step, we can see actually on the TV, there's actually a slide that shows how we actually arrive at the surplus or deficit of our budget. So we can see what we actually do actually on the screen is actually the income minus the actually expenses. Then we will have a surplus or deficit. Okay, so of course what I show on the TV is just a very simple template. For more detailed sample template for you to do budgeting, you can go to yapminghui.com, my website. Go under the section of latest news. then you'll be able to find instruction as to how you can download a template to do your budgeting in a comprehensive manner. So like what mentioned, now we come to the step 3. Step 3, we talk about to determine whether you end up surplus or whether deficit at the end of your whole spending for the year. So of course, this is something that you will know in advance before you actually go to spend. You need to know whether if you're going to spend according to what you plan, you end up positive or negative. Now, I would suggest that before you determine that, I would suggest you to make some provision for your unforeseen expenses. Because I think sometimes we may have some expenses like some friends, relatives who visit us. Thereby we actually incur extra expenses to entertain him or actually to bring him around. There could be also car breaks down, then we can actually spend some money to repair the car, which we never actually provide the expenses. So I would always suggest that we provide extra 5% of our total expenses so that we will have enough, okay, to budget for unforeseen expenses. Okay. Once you've done that, if we actually discover there's a surplus of whatever spending you have in the month and you total up the whole year, then I would congratulate you. My suggestion is that it's very important for you to have a plan in advance to save and invest those money. And I would suggest better still is you can actually invest and save this money even before you start spending every month. So if you say, if you know that every month you have 2,000 per month extra saving, so before you start spending it, okay, you actually invest this 2,000 somewhere, whether into an ASB, whether into actually any unit trust investment in advance before you start spending the money. Okay. Then if there is a deficit, do not fear, okay? What we need to do is to find ways to increase your income, either to find ways to work harder, work smarter to increase the income. Of course, another way is to decrease your expenses. Now, what expenses item do we decrease? I would suggest go back to those expenses item that you have, look at those one item. Remember, one item is those one expenses that you may decrease and it won't affect your family and your own self livelihood. So this is what I have to share today, talking about how to set a good budget. So always remember, smarter you, smarter money management. So over back to you, Nas and Hansen.
Thank you, Mr. Yap.
Thank you, Mr. Yap. For the whole week, I was like this. Yeah.
We definitely learned a lot.
That's for sure.
Hopefully our viewers also have taken down notes and made sure that you know how to start budgeting, because that's the key, right? You have to start somewhere.
Exactly.
You have to start somewhere.
We're going to pick up a few things that you've mentioned, of course. First of all, this very important aspect of needs versus wants. Yeah, everybody
very subjective,
has to.
Right?
Yeah, it's very subjective, and everyone has to identify it. But for example, there comes at a crossroads in your life where a need is confused with the want. For example, okay, you're starting up family, and of course you have difficulty traveling here and there. So you need a car. Yeah. Okay, I need a car, so I'll buy myself a Proto Perdana V6. Wow. See, I have car now. See, that's where need becomes a want. How should people handle that, honestly?
I would definitely agree that transportation is actually basic needs. Okay, and actually ideally in a developed country, okay, the government should actually do proper planning to ensure the transportation for the people to go to work, at least there is a public transport, plan efficiently to take care of us. Then our spending on transportation will be very minimal. Then we got no excuse to say, I need a big car, expensive car to take care of my transportation needs.
But when should people know that, okay, I need a car, but I cannot afford it? It's so hard for people to say, I cannot afford it, because the want takes over the need, How should people identify it,
I think it's very important for us to learn this concept called delay gratification. So when we do budgeting, we do saving and investing, we are not saying life's supposed to be boring, life's supposed to be like no enjoyment. No, what we are saying here is that if we can actually do some delay on all this enjoyment, so for example, now we need to buy a car, instead of buying a lavish, expensive car, eventually stretch your budget to the limit. So what you actually do is that you buy a basic car, we can just take care of your needs. You can even buy
from point A to point B.
Yes, you can even buy a second-hand car, as long as it's in good condition. Actually lower price car to take care of your basic transport needs. Then your extra saving that you got, then you can invest and grow it. So later on, when you have more income, passive income, and all this income, of course, then you can choose whatever car you want.
That's what we call delayed gratification.
Yes.
Of course, I mean, sometimes you have to delay a long time if you want to buy a Ferrari. You can delay a little bit less if you want to buy a Perdana V6.
Maybe never.
That sort of thing, you know.
For most of us.
Well, you never know. You know, Hanson very rich actually.
I just don't like that the road conditions drive my Ferrari.
Okay, but here's another point that Hanson's brought up as well. See, I can afford a Ferrari. I'm rich lah. High income person lah. I don't need to budget lah. True.
Yeah, actually, some people have got thinking that budgeting is only for those people who get like middle income or lower income, so that you're very careful with your expenses, so that you do not actually overspend it. Okay, but I was thinking is that personally, there's one law. I don't know if you heard of it. It's called Parkinson's law.
Right. Parkinson's law.
Yeah.
Okay.
I'm sure you heard of Parkinson's disease.
Yes.
So Parkinson's law and Parkinson's disease got nothing to do with each other.
Different Parkinson's.
Different Parkinson's. This Parkinson's law say that no matter how high your income that you make, you don't have to worry. You know why? Because your expenses somehow will catch up to your actual income, and then a lot of time it will surplus. Personally, I have seen clients who make actually $1 million a year, but his expenses in a year can go up to $1 million as well.
Oh my goodness!
Yeah. So we should say that, so that unless even though you actually make an income of $1 million, you still end up breaking even. Okay, so unless you do a proper budgeting, then you will know that this is how I want to prioritize my expenses. Okay, you want to buy this Ferrari, how much I'm going to pay, and at the end I still got some surplus. Buy one instead of two.
That's good advice for high income.
What about things like critical medical stuff? I mean, how do we budget for things like that? We hear a lot of situations whereby suddenly some unfortunate family member fell ill or something like that, or even yourself, and then where do you find that kind of money to sort of medical expenses these days are skyrocketed and it's really expensive.
Or any alternative strategies?
I would say that when it comes to actually planning for the kind of event of this major medical expenses, I think what we need to do is, of course, we can say, we can save how much, things like that. But I think no matter how much you save, one major illness strike you, it costs you 50,000, 100,000, then it's not enough. So that's why one element of budgeting is also to provide for insurance coverage. So when you can transfer the risk of insurance coverage to cover for 100,000, you may spend only 2,000 per year insurance premium to take care of expenses. There's some people who actually can plan their expenses so well that they're worried about their parents, not only themselves, their wife, also their children. They're worried about their elderly parents also suffer from this kind of illnesses, and then cost them money. They even buy insurance for their parents.
It's considered an investment,
it is a protection, so that they will not blow a big hole to their finances should the parents go to hospital.
Excellent.
Okay, I think we've learned quite a lot from you today, Mr. Yap.
We're just gonna ask one last one, which is about the total expensive. You noted that there should be an extra 5% buffer. Honestly, is that enough? 5%
in today's
world
economy.
We are talking about here this is just a buffer. So that's why when we actually itemize all this. These basic expenses and your one expenses, you should actually cover maybe 90% or 95% of whatever expenses that you should be incurring based on your last year's experience and things like that. So this 5% that we actually have is just additional buffer that you put it in.
Just in case.
Yes.
Just a cushioning.
It's a cushioning. So if this is just for the unexpected expenses.
I see. Well, there you go. I feel smarter already. Thank you so much, Mr.
I feel
Yap.
my money already, making more money now, or worth more its value.
But if you want to learn how to really do budgeting, Hanson, all you have to do, and of course our viewers can pick this up as well, visit www.yapminghui.com and you can actually download a budget template. So if you're figuring how am I going to draw all these boxes and blah 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 blah, what are the things I have to put in? Well, just follow the template, and of course Mr. Yap will guide you towards financial freedom.